Hi everyone, welcome to another update on the stock screener. We need to talk about Mako Mining and Soma Gold because these two companies are actually pretty similar. And which one is actually the cheapest? That's the $1,000,000 question. Which one should we buy? Mako Mining or Soma Gold? So this will be another comparison video. On one hand, we have Mako Mining went up, down, and now it's rising again. So technically, this is pretty good to buy. Soma Gold is just one straight line up. It's probably going to continue to go up. So which one should we buy? Of course, we always look at the fundamentals. We don't look only at the technicals. Okay? We need to look at the fundamentals as well. Market cap here is double the amount of Soma Gold, by the way. Double 60 million here and here 120 million. So I would say Soma Gold is pretty cheap, right? Now let's look at the fundamentals. So as I said, market cap is double of Soma Gold. That's already telling me that Mako Mining might be overvalued compared to Soma Gold. Enterprise value, we see that Mako Mining has 25 million higher enterprise value than Soma Gold. Not double, because Soma Gold has more debt than Mako Mining. So that's a minus point for Soma Gold. They still have quite a lot of debt. Mako Mining has less debt. Type of mine, this is an open pit mine, very shallow. That's good. That's very favorable compared to Soma Gold, which is underground. So probably more difficult to mine than open pit. This is in Nicaragua. Not a very good jurisdiction. There are sanctions here. Colombia is better than Nicaragua. That's what I think. Pretty good country to invest in. Mine life. And now comes the interesting part. All of these things here are just the same. Mine life here, they just got a resource 6 years. Soma Gold, on paper, it's 3 years, but they have done a lot of drilling. In a few years from now, they will release their resource estimate. I'm pretty sure they will be around 6 years as well. So that's the same here. With growth, of course, they will keep on drilling and expanding the resource. Production is also the same. Mako Mining already has the 45,000. Soma Gold with the second mill will also get 45,000. Future production can be increased to 75,000 by increasing the tonnage. Here the same, they will also go to 75,000. Tonnage here is 600. This is a bit higher, 650, almost the same. This can go to 1,000 tons per day. This one can go to 1,400 tons per day, permitted. So actually Soma Gold has more expansion capacity. Of course, they need to find the resources as well. Recovery is about the same, 90%. So also the same. Both are high-grade mines. This one is a bit higher grade, 11. But of course, Mako Mining has one problem, and that's the carbonated ore. They need to dilute it with something else to get the grade down to 8. So actually, the grade is almost the same. If you compare 8 to 7, it's about the same. And all-in sustaining cost is also the same at 1,100. And the capex to expand the mill is also 4 million. So actually, Mako Mining and Soma Gold are basically the same company when you look at these metrics. It's all the same. The only thing that's different is this enterprise value to free cash flow. Here it's 6 because the enterprise value is higher. And they also have more royalties to pay as well. So here it's 6. At Soma Gold, it's 4. So this tells me that Soma Gold is cheaper. Yeah, that's because market cap and enterprise value are cheaper at Soma Gold than Mako Mining, while they produce the same amount of gold at the same all-in sustaining cost. So naturally, Soma Gold will have a cheaper enterprise value to free cash flow. The leverage is higher at Soma Gold, 6 leverage to gold, and Mako Mining only 4 times leverage. Why is this? Because Soma Gold and Mako Mining have the same amount of production, 45,000, but Soma Gold is trading at half the market cap of Mako Mining. And that gives the leverage. The lower your market cap is compared to the production, then you will have higher leverage to gold. Okay? It's all about the production. The higher your production is compared to the market cap, the higher the leverage to gold. So not only is Soma Gold cheaper in value, it also has more leverage to gold. So you know where I'm going right now. I think Soma Gold is cheaper and is a better buy. And you can see that also on the NPV calculations. Mako Mining has this curve, looks like an exponential curve. You get your money back in 1, 2, 3, 4, 5, 6, 7 years. At Soma Gold, we have more hyperbole curve, exponential hyperbole. So here you get your money back in 1, 2, 3, 4 years. So much faster. And you can look at the numbers here. You also have the Tucuma payment of $8 million. So at some point, Soma Gold will get $8 million for the Brazil asset that they sold to Ero Copper. So that's a bonus, which we don't have here. And that gives a boost here. So looks pretty good, this chart here. I'm not saying that this is a bad chart, it's just this one is better. And here we have the leverage charts based on 5 times net earnings. Current gold price is at 2,000 and the market cap is currently here. So there is some upside from here to here. A double is possible for Soma Gold once they achieve their production in 2024. This is in CAD. And this is in US dollars because Mako Mining reports in US dollars. So here at 2000 gold, we are actually fair value. Okay, we are actually fair value right now at 2000 gold. Yes, 5 times earnings. So not a lot of upside anymore for Mako Mining based on 2000 gold. But if gold goes up, of course, there is plenty of leverage. If you go to 2500, then this can double. Okay. Here, if we go to 2500, this can actually go from 70 to 250, a triple. Okay. So Soma Gold can triple and Mako mining can double. That says it all. Soma Gold is definitely cheaper and a better buy. So which one would you buy? I have no idea, but I'm going to buy Soma Gold. And I'll see you in the next video. Bye.